welcome to CNBC TV18 presents Leaders of Growth. Mindspace REIT has completed 5 years since listing, a period that's seen steady performance, evolving workspaces, and strong demand drivers. Today, we look at what these 5 years tell us and how it's been building resilience in today's time. We also look at capital allocation, next-gen campus design, what GCCs are demanding, and why investors are leaning towards commercial REITs. And to unpack all of this, we have the MD and CEO of Mindspace REIT, Ramesh Nair, joining us right now. Ramesh, thank you so much for joining us on the show because it is important to know about REITs. Everyone wants to invest in REITs. Everyone wants to talk about REITs. Let's start by talking about that because the property that we are standing in, it's that next-gen workspace that everyone wants. So in terms of overall, what was your thought process behind this? How did all of that work out for the company? And today's occupiers, what are they demanding from you all? Is this there or is there something more than this that they want?
Vinnii, let's look at our target clients and the employees who work for them. Most of them are millennials, most of them are Gen Z. If you look at a typical IT company or GCC, entry level is around 25-30% of the people. Middle level between 30 to 40 years age group would be another 70%. We're talking senior management of only 5%. So our focus is to build what the 95% of the people are looking at. Now, what are they looking at, especially after COVID? Today, companies are looking at how can they keep their employees more productive and happy. They are looking at how can we give more flexibility to our employees. Flexibility means today an employee wants to work in a cafe, he wants to work in an amphitheater, he wants to sit in a garden like this and work. Can we give those options of flexibility to the employee? 2-3 things which we have seen is attendance rates are significantly increasing, which means utilization has gone up. Today, across the cities, the numbers we hear is between 80 to 95% of the people are back in offices. You remember COVID time, the next year, 2 years after COVID, the attendance had dropped. Today, that number is between 80 to 95%, depending on which city you are in. 4-5 other things which we have seen is from a company point of view, today they are looking for flexibility. Companies are willing to pay more for flexibility. Today, campuses have more collab zones. If you look at our drive around our campus, you'll see places where people can come together. That's very important. More tech-enabled campuses. That's another thing which you see. The youngsters don't want high-rise boxes. They're looking for low-rise.
Everyone wants now the chill scene also with work. No one wants to work in those typical cubicle era.
Exactly. So they want more green, more breathable spaces, more open areas. And our job is to provide all that to those millennials and Gen Z.
Absolutely. You know, Ramesh, let's also talk about the number on the quarter gone by, right? How was that in terms of performance? And what is it that one could see or envisage now from the company? Let's talk about Q2 first.
So, Vinnii, we've been big beneficiaries of the favorable office market conditions in the country. Let's just look at the last 3-4 years, how the numbers have behaved. We're looking at office net absorption, which has gone up from 25 to 50 million square feet. Gross leasing, which has gone up from 34 to 77 million square feet. Vacancy, which has dropped from 18% to 14%. Interest rates, you have seen how repo rates have dropped in the last 9 months. All this is helping us. The last quarter, our occupancy went up to an all-time high of 94.6%. Our NOI grew by close to 28%. Our DPU growth has been close to 16%. So all this is falling into place. Now, look at the last 1 year. Vinnii, you track the stock markets. I see you on TV. September 21st, I was reading equity returns was zero over 12 months. Same time, REITs have given a Mindspace REIT over the last 12 months has given a total return of 36%. Over a 2-year period, Mindspace REIT has given a return of 26% per annum. And since listing, we've given a return of close to 16%. Now let's put that into the bigger frame. Like let's look at it from an international investor's point of view. 16% return since listing. Real return, let's say you take off 3% off, from a rupee depreciation point of view, we're still talking of a real return of 13%. Let's take another 2%, which is from an inflationary point of view, we're still talking about 11% return. Same thing for the Indian investor. 16% total return, you take off 5% from an inflationary point of view, you're still talking of 11% rupee real return. So today, the asset class is not so well known. And
that's my thing, you know, because it's not so well known. Now, every time when someone wants to invest, or even when I started reading about REITs, we talk about DPUs, distribution per unit. What is the important matrices? Is that the most important one? Because that's what everyone talks about or asks about in terms of where do you see that going? Because that's something that's paid to the investor. What do you watch out for? What is it that as an investor viewer that I should look at?
So DPU is very important to look, which is the dividends we give every quarter. We are supposed to be giving 90% of our NDCF back to investors. If we look at all the REITs combined, we have given a dividend of close to overall of returns of close to 14.8%. What investors need to look at when they're looking at REITs is to look at the total return and not just look at the dividend return. Dividend return typically is between 5 to 7%. And then you look at the appreciation of your stock, which also happens simultaneously. So if you have to break this 14.8%, let's call it 15%, you're talking of 6% of dividends and around 9% of capital appreciation. That's how an investor should be looking.
So that dividend DPU is important, but my total return as an investor is very important to look at it, because that other majority 9% is coming in, or it could be higher also, right? The capital appreciation, which will be important as well. And where do you see that moving going forward, like in Q2, from Q2 to?
So let's look at the outlook for the market. We saw 2 tough months. In April, it was the Liberation Day tariffs Trump was talking about. In May was the war for those couple of weeks. In spite of that, the first 9 months of this year, we've seen a 28% increase in overall demand in office space in the top 6 cities.
Still.
In spite of that. So I think that just shows that the market is very resilient. We are seeing many companies globally looking at India. Today, we have close to 1,900 global capability centers in the country. The next 4 years, this number is expected to go to around 2,500, and that's driving the growth.
Okay. Occupancies, rentals, tenant mix. You just spoke about global capability centers. We'll come back to that later. But overall, how do you see your portfolio changing, right? Because times are changing. So I want to understand all of that. You mentioned occupancies were the highest in Q2, right? 94.6. So how do you see that moving? That's an amazing number, 94.6. So where from here in the next 2-3 years?
So 2-3 big changes happening. IT services used to contribute a lot of demand and part of our portfolio. Now, IT services has kind of reduced, and that's been compensated very well by global capability centers. So look at our portfolio. Close to 54% of our portfolio today is global capability centers. Another 20% is IT services, and balance is Indian multinationals and domestic companies. So we've seen domestic companies today, a lot of Indian companies who are fine being in grade B spaces, wanting to be in campuses like this, wanting to be in good grade A plus buildings. So that's a big trend we are seeing. Where do we see growth from a REIT point of view? There are 2 ways we can grow, organically and inorganically. Organically, we have close to 7 million square feet, which we need to develop, which is from approval stage to construction finishing. There's multiple projects. That's close to 7 million square feet. Now that's going to produce rents once it's completed and it's leased out. So that's the first way. Second way is we obviously have the rental escalations which happen. Every year there's a rental escalation which happens. There are always mark-to-market opportunities. Some of these tenants may not be paying you market rentals. So they may move out. Then we get somebody who's close to the market to come and take space. That's another way. Plus, we have vacant space in some of our buildings across the country. So how do you fill it up? That also gives you rentals. That's the organic way of doing. Inorganically, we have an extremely credible sponsor in K. Raheja Corp. They've been in the business for the last 6 decades, very well known for governance standards across the industry. They're producing close to 20 million square feet. How do we get part of this 20 million square feet into the REIT?
Yeah.
That's inorganically, that's how we grow. We're always looking for external third-party acquisitions. That's something, again, we can
Is
look
that
at.
on a higher speed now, third-party acquisitions, or how does it work?
Definitely. So, Vinnii, in the last 1.5 years odd, we've acquired close to 3,300 crores of assets totaling 3.3 million square feet. In this 3.3 million square feet, 1.8 million square feet came from the sponsors and 1.5 million came from third-party acquisition. So it's a good mix of both sponsor as well as third-party acquisition.
Okay, that's very interesting to know. Contracts is what you spoke about as well, right? So one, I want to know in terms of what is the contract and how does it work? Normally, are they long-term contracts? So how does this work with your tenants? And what is the important role in terms of feedback also, right? Because everyone wants something different, something new as an occupier, right? So how is it in terms of amenities? What are the demands that come in? Because there are cafes, there are creches, there's everything here. So I want to understand that as well.
So from a contract point of view, typical office leases are 10 years. There's a term called weighted average lease expiry, what we call WALE. Today, that's at around 6.8 years in our portfolio. So that's something data center companies give us much longer leases.
Okay.
We have 5 data centers in our portfolio. So that typical lock-in periods are 15 to 20 years. Lease periods are close to 25 to 30 years. So they give longer lock-ins.
Okay, that's about GCC's data centers, but we're going to continue this conversation. We're going to take a very short break and continue with this discussion: tenants, rentals, GCC's data centers for REITs, what it means. Welcome back to Leaders of Growth, and we're continuing a conversation with Ramesh Nair, MD and CEO at Mindspace REIT. Ramesh, we were talking about feedbacks from tenant, GCC's data centers. I want to start by talking about all of that. First, let's talk about feedback from tenants. How important is it in today's time, and how does it shape your portfolios or your properties that you're making?
Vinnii, we have a very simple mantra: tenant first always. For us, an NPS score from an occupier tenant is as important as NOI or NDCF numbers. So we track this every 6 months. We go back to tenants. Last time around, out of 177 occupier clients we have, we interviewed 172 of them.
Okay.
And we asked lots of questions. They're kind enough to spend that half an hour, 45 minutes with our market research agency. So lots of things which we have learned, like we went back to clients and asked them, what are the kind of amenities which you need? What are the kind of wellness features which we can provide? What are the improvement areas which we need? And all this gets incorporated in these parks over a period of time. There are always scope for improvement. And I review this on a monthly basis. Are we taking our client feedback seriously? And creating those loops of feedback on a quarterly basis becomes very important for us.
Absolutely. Now let's shift focus and talk about your global capability centers and data centers. Now, whenever I talk to anyone, whether it's on the IT side, service side, data centers, even cap goods side, they talk about data centers. Now, if you are providing the infra for data centers, how does it work for the company? And is it on made to order kind of a basis? Once you get the client, does it work? How does it?
Let's start with data centers and I'll move to global capability centers. Today, we are the only REIT which has 5 data centers in our portfolio. 2 has already been delivered. 3 data centers are under construction as we talk. Where does the data center help us? Today, 5 years back when we listed, our portfolio was very office focused. Today, we're looking at how can we diversify that office portfolio. Data centers was a natural extension. The fact that Navi Mumbai today is India's most sought after data center hub. Close to 55% of the data center capacity which is being built in the country is coming up in Navi Mumbai. And we have this 100 acres in Airoli. So that gave us a big opportunity. Data center clients also give you longer lock-ins, like I said, and also diversify. The other diversification which we looked at is how do we create more hotels within our portfolio? We already have 2 hotels in our portfolio. Looking at how can we again increase that maybe to 4 or 5. That's another strategy we have. Third is how do we create more clubs within our portfolio? In Hyderabad, something what we are creating, it's called the Pearl Club, going to be ready in the next 2-3 months, it's going to be the best club in the country. So that's something which we're doing, and also increasing the F&B, retail, amenities, all that. So different revenue streams, not just the office revenue stream. How do we make rentals out of data centers? How do we make rentals out of hotels? And how do we make rentals out of F&B? So all that
All
comes.
of that comes. And data centers, obviously, if they're longer term contracts, do they normally give you better returns also, right? Or
It does.
It will be, right?
It does.
Versus
Like,
a normal commercial space.
like in this market, for example, our office fetches is 70 rupees rental. A data center fetches is more than 100 rupees.
So that's interesting. And obviously, it's not going to be easy to lift up data centers and move around. So that contract, like you said, is longer. And even extensions would come into play.
Exactly.
And with all of this, for REITs, normally, there will be, how fast is these renewals of rental contracts?
So typically, for an office lease, like I mentioned, lease contracts are 10 years. And for data centers, it's between 20 to 30 years.
Yeah, okay. That's interesting. Ramesh, let's also talk about investors' point of view. What makes REITs a solid bet? Everyone wants to bet on it. Everyone's talking about it. But if you had to sell it to an investor, what is it that makes it good for retail as well as HNI investors?
So multiple benefits, Vinnii. First is every investor needs to diversify in a world like today. And REITs is a perfect example for an investor to diversify. Second, you get quarterly dividends. So that's your income which you get.
Yeah.
Third is more from a transparency point of view. Today, REITs offer the highest governance standards. 5 years, 6 years back, REIT was just a concept. It was an experiment, and the first REIT got listed in April 2019. Today, it's a very stabilized asset class with track records, 5 great REITs, great sponsors behind those REITs. We're again looking at tax benefits. The income which you make as dividends is more or less fully tax-free. That's another big advantage. Liquidity. When REITs first came in, you had to put a minimum of 2 lakhs. Today, you can buy 1 REIT unit. You can sell a REIT at the press of a button, so it gives you liquidity. There was a time when HNIs, Vinnii, would go and buy a floor of an office building. They would go buy an office building somewhere.
True.
Today, the same HNIs and ultra HNIs are coming back and saying, let me buy a REIT. One, because I'm not concentrated in one place. Yeah. Let's say I buy 1 floor of this and this floor gets vacant. Then my income stream stops. But you buy a REIT unit, which is in 4 different cities, in 63 different buildings. So it kind of gets leveled out more even if there is vacancy. From a succession point of view, let's say you own a floor and you were to divide it amongst your 3 children and your wife, how are you going to divide it? Yeah. Because once you strata sell, that's a perfect recipe for a disaster. So today, HNIs are realizing, let me put it in a REIT and let me give that from a succession point of view. It helps. And commercial real estate is not so easy. It needs a lot of hands-on management, which REITs like us do. So if one is looking for a product which has the liquidity of the stock markets, which has the governance of a listed company, which has all these benefits, I think one should definitely look at
absolutely. That's a good bet, and so many points that you've highlighted. Not that I thought about all of it, but for you, are you eyeing any new asset classes that could add down to the REIT, or how does it move down the line now?
So, like I said, Vinnii, the focus is on office. We are creating more data centers. We are creating more hotels. Like, let me clarify that when I said data centers and hotels, we are creating the core and shell. Okay. The hotel is going to be managed by an expert firm. Interiors are going to be done by a hotel company. Data centers, again, the interiors, all your chips and all your server farms and everything is going to be done by data center experts. We do the core and shell, we give the power, we give the building, and we collect a rent.
But that demand is surely increasing.
That demand is definitely increasing, and given that we have so much land in Navi Mumbai, there are opportunities which would come up in the future for further data centers.
Absolutely. Ramesh, now let's talk about the recent decision that's coming from the SEBI, right? To maybe reclassify REITs as an equity. How does it impact Mindspace? What's your strategy now from here on? How are you viewing this decision overall?
It's a big game changer for us, Vinnii. So what this has done is REIT, which is seen as a very niche asset class, has now gotten to the mainstream. So we are looking at multiple mutual funds who will have REIT InvIT specific products. Today, you look at the REIT and InvIT market. REITs have around 2,25,000 crores of AUM. InvITs have around 7 lakh crores of AUM. That's close 9 lakh plus crores of AUM. If you rewind back 12 years back, this is exactly where the mutual fund industry was. Today, the same mutual fund industry is 75 lakh crore plus. Only 300,000 people invest in Indian REITs even today. The same number for mutual funds is 5.5 crores. So look at the overall REITs, office REITs, you total all their square footage. That's only 165 million square feet. There's close to 500 million square feet of REITable office stock in the country. So these are the big opportunities, and we believe there will be a lot more investors looking at REITs given the equity classification, given that 60% of all mutual funds are equity mutual funds. There would be more liquidity, there would be better price discovery and easier entry access for investors. So all these benefits REITs are going to get in the coming
obviously a lot of benefits, and we started the show by talking about returns as well, so that is something that an investor always looks at. But Ramesh, before we wind this down, let's talk about you, because you've been a CEO for a long time. Buy side, sell side, you have a lot of experience, a lot of lessons, a lot of learnings. How are you implementing all of this? What is it that maybe you could impart something to our viewers?
On the sell side, what you learn, Vinnii, is your product is your people. If you take care of your people, they do a better job with your clients. They retain the clients, they maintain our properties well, they build better buildings. So that's one. Professionalism is obviously things which you do when no one is looking at you. That again is important. Buy side teaches you to be patient. Buy side teaches you to be disciplined. It teaches you to think more long term, and sell side teaches you to be more client centric and that sense of urgency. So trying to mix the best of both worlds.
Trying to mix the best of both worlds, but you're surely something that's bringing out very well. So Ramesh, thank you so much for joining us on Leaders of Growth. It's a great episode. Great to understand REITs, great to understand as an investment perspective where the company is at as well. So thank you so much for that. And viewers, thank you so much for tuning in to Leaders of Growth on this very special episode with Mindspace REIT. Thanks so much for that.